Hi everyone, my name's Anita Marshall from Advanced Finance Solutions and I'm a mortgage broker from Port Stephens, and Saffron from What's On in Our Backyard has invited me along tonight for this live broadcast to just fill you in on a little bit about what we do in Port Stephens for our Port Stephens clients, but for that matter we can actually help people outside the area too. So hopefully some of you that are tuned in from out of the area might also get some valuable information from me tonight. So what I want to talk to you about is how to achieve the dream of getting out of your own home, out of a rental property and into your own home. There's so many people out there that feel that that dream is not achievable. And, the latest statistics that have come out, seems that more than ever people think that it isn't possible to, to get out of that rental market and stop paying rent to your landlord. And, I really want to put the message out there that it really is possible. It mightn't happen overnight, so you need to put a plan in place and you really need to get some information and get the right resources and people behind you that are going to help you achieve that dream. So please don't give up on your dream. So just a little bit about me first of all. My name is Anita Marshall, as I said, and I'm a mortgage broker, and I've been broking now for about 12 years. My absolute favourite type of client is the first home buyer, because to see someone get out of that rental property and achieve something, get their own home, be paying off their own home is really, really rewarding for us. We of course do investment property finance. We do loans for people that want to buy property through their super. We can do refinancing to get people's interest rates down, and also debt consolidation. So we do have a lot of services that we offer, but as I said, our favourite type of loan to do is the first home buyer, so people getting out of that rental market and into their own home. So what we can offer for those first home buyers is we can help you put together a plan to actually buy rather than be renting. So you come in and see us. The session normally takes about an hour, and what we do is we work out how much deposit you're going to need for the property, what your borrowing capacity is, how long it's going to take you to save that money. We can help you put a budget in place. So all of that can be done, then tailor-made to suit you and your needs. And that service is completely free of charge. In fact, all of our services are completely free of charge. We don't charge our clients a brokerage fee. Whatever the bank's fees are going to be if you went direct to your choice of lender of choice would be the same as if you went through us. So yes, if you if you went direct to say Westpac, the fees would be exactly the same as if you came through us, but the advantage is that we're there holding your hand all the way through the transaction. So, it means that you've got someone helping you and guiding you as you go along the process. So one of the biggest questions that we get asked is how much deposit you're going to need to purchase your own home. And that's probably the biggest stumbling block for a lot of people. If you're renting and you're trying to save, it can sometimes seem like an impossible task. So the first thing is, if any of you have family members that have got a decent amount of equity in their own home, they don't have to own the home outright, but if they've got a decent amount of equity, we can do what's called a family pledge. And that means you don't actually have to have a deposit at all, as long as you can prove that you've got a good rental history, or you're actually quite good with your money in other ways. You might have been paying loans off and credit cards, and you can show the lender that you have got the potential to pay things back, or to rent and have perfect rental history, and you've got the family member that's willing to put their home up as partial security, then that means you don't have to have a deposit at all. So that's one way that some people, manage to get into their own home. The second way, if parents or family are not happy to do that, is if they give you a gift. Now, often, depends on the lender, that gift needs to sit in your bank account for at least 3 months. So if you're talking about doing gifts and things, just, have a chat to the family member. You might want to open up a joint bank account, put the money into your name with their name as well on the account, and let that sit there for 3 months. So that's, with most lenders, it would be required to be there for the full 3 months before they would be prepared to do the home loan for you. As opposed to the family pledge that I talked about, you don't need to have any savings whatsoever, just some sort of proof of good rental history. Now, the third and hardest way to do this is actually, to save the money. And that can be really difficult and challenging when you're renting. But it can be done, and it doesn't necessarily have to be a 1 or even 2 year plan. It can be a longer term plan, but you need to put the plan into place, and you need to start a savings account and, just really get it happening. So the best way to do that, in my opinion, is to open up and have 3 different bank accounts. So have one account specifically for your savings for the house, and make that an account that you cannot touch through internet banking or card access. So maybe, open that up with a bank or a building society that's not where your everyday savings account is, and don't have it linked to your internet banking. When it's linked to your internet banking or to credit card access, it's just too easy to go out on the weekend and run out of money and think, oh, I'll just take it out of my home savings account. So this account really needs to be completely separate to all of your other accounts. And, put as much as you possibly can into that every week, every fortnight, whenever you're paid, put some money into that. The second account I recommend you have is a bills account. So you put money aside every week for things like your rego, your insurances, your car services, your petrol, sorry, not your petrol, your electricity, your phone bills, any sort of bills whatsoever that you have that come up on a reasonably regular basis, on an annual, fortnightly, monthly, quarterly basis. Put that into a separate account. And then the third bank account is your everyday spending account. So have that account as, things you can use, so petrol, groceries, going out for dinner, takeaway. Have that into that third separate account. If you run out of money one week in that account, you live out of your pantry, you can't do anything, you can't have a life. Because if you don't separate your accounts, it's really hard to budget. So it's really important to have those three accounts. So savings, everyday savings, your home savings, and then your bills. And separate your money. Every single time you're paid, put your money into those three accounts. And that way it'll help you budget, a lot more, and it'll help you actually save. Okay, the next question we get asked a lot is, how much deposit do you need? So you've started saving and you're starting to achieve your dream. So it really depends on the price of the property that you want to buy. And just on that, keep in mind that if it's your very first home, you don't have to be buying your dream forever home. Even if you just get out of that rental market and get into something so that you're not paying your landlord's property off for him. You can always upgrade at a later date, you can always sell and upsize, you can always turn that into an investment property. It doesn't have to be your lifetime dream home that you're buying for your first property. So, maybe start with a lower purchase price if you can. And on average, you're looking at around 10% of the purchase price for some lenders, between 10 and 13%, but the absolute minimum amount that you need to have saved up is about 10% of the purchase price. So if you're looking at a $400,000 property, you're going to need about $40,000 minimum. So with some lenders they require more, but the absolute least would be 40. Some lenders up to 13% of the purchase price, so that would be about $52,000. So yes, so basically how that works is 5% goes towards the deposit on the property, and then of course you've got stamp duty, you've got legal fees, and all sorts of other fees. So they all add up to about another 5%. So that's where the 10% is made up from. So there's a few lenders that will let you proceed with a property purchase with only 10% deposit. Quite a lot of other lenders, as I said, do require more. So if the more deposit you have saved up, the more lenders you're going to be able to have as a choice for your home loan. So we have 45 lenders on our panel in total, including all the major banks. So we can work your borrowing capacity out with, a variety of lenders and let you know who would lend what the interest rates would be, and all of those types of things. I'm just going to have a look and see what other questions we've got coming in. Okay, so other things that people are asking is about income. So how do we work out what your borrowing capacity is? So the first thing they look at is how much savings you've got. If you haven't got enough savings, they just won't do the loan. So you either need the family pledge, the gift, or genuine savings. From there, we look at your income. So what income you're receiving, and they will take into consideration things like your payroll, Centrelink Part A and B. Some lenders will take some pensions. They'll take sort of, lots of different varying types of income, just depending on the lender. So they look at your income, and then they also look at your liabilities. So what existing loans, credit cards, store accounts you have. Now, just so you know, for credit cards, they work on the limit of the card because you've got the potential to, owe the full amount. So if you say have a $13,000 credit card and you've only got a couple of $1,000s owing on it, I would recommend that you try and bring the balance of that, the credit card down as low as you can, and then reduce the limit down as low as you possibly can before you apply for the home loan. The other thing is, if you've got lots of little debts, it might be an idea to put them all into one, to do a debt consolidation before you apply for the home loan, because the more debts you've got, the banks sort of don't look overly favourable on those types of loans. So try and get rid of as many loans as you can, but also get your savings up before you apply for the home loan. This can seem a little bit overwhelming now because you're sort of thinking about all these things that you might have to do. What I suggest is you come into our office, you make an appointment with myself or Marion, and come into our office and have an hour with us. And what we do is we work out, what price range property you're likely to want to buy, how much savings you're going to need, what lenders would lend you what amounts of money, what the repayments would be. We can also work out strategies for getting, the application as strong as it can be before we submit the application. I think it's really important that when we lodge a loan application for you, that it's as strong as possible. So, you're submitting the strongest application to the lender as possible the first time around, so that there's more chance of that loan getting approved. We also make lots of notes to the lender explaining your situation and, trying to help the assessor on the other end of the application understand you and your asset position. Another great thing to bring in when you come in to see us is a copy of your rental ledger from your current real estate agent. The lenders love seeing good history on a loan, so if you've got a rental ledger that you can show that you've been paying your rent on time for the last 12 months or even the last 6 months, that's really helpful to the lender so that they know that you're in a position to be able to afford this loan and that you've got good, credible rental history. If it's a private rental, it doesn't hold as much weight, so that rental ledger from a real estate agent is really a very valuable piece of paper when we're going for the loan. Okay, I'm just going to have a look on the screen and see what other questions. Sounds great. Okay, Rebecca has asked, can you please explain low doc loans? Okay, so a low doc loan is where if you're self-employed, you can do a loan if you have at least a 20% deposit. So you have to have 20% plus enough to cover costs. So probably around 25–26% of the purchase price. And how they work is it's for self-employed people. You need to have had an ABN for at least 2 years. If you haven't done your tax return or you're having problems proving your income, instead of showing your tax return and your tax assessment notices, you can actually get what's called a low doc declaration filled out. Now, depending on the lender, depends on whether or not you have to have an accountant sign off on that to prove that your income is what you're stating it is. Or sometimes they'll go off your GST returns, and sometimes they'll go off deposits into your bank account. So they actually call them low doc because you're not providing your full taxation records for proof of your income. Now, these loans used to be really, really popular years ago before that global financial crisis. They were very, very simple back then. You just signed a declaration to say what your income was, and that was about as hard as it got. But nowadays there is further verification that they do, as I said, either through the accountant or through your GST or your bank account statements. So that's that part of it. Now I can see another couple of questions coming through. Taylor, woohoo. Just so you know, when you're doing a loan through Advanced Finance Solutions, you're not just getting myself or Marion. We have a team of 9 staff in total, 4 full-time, 5 part-time. So they actually work on the files and ring the lenders, chase them, order valuations. We're constantly working on your file until we get that loan approved, and then all the way through to settlement. So we do employ quite a lot of local people. And the other thing that I want to point out too is when you're going through Advanced Finance Solutions as opposed to direct to your bank, we actually have a community program that we work on where we try and make a difference in the community. So we're all involved in local fundraising activities, and we're always doing something towards making a difference. We're very big on that. So yes, that's another little bonus that you all get to know, that you're helping employ people in the local area plus make a difference in the local area. Now I can see another couple of questions. It's a shame I need glasses. Okay, so we've got Rebecca saying, great, thanks. I hope that answered the questions. Okay, what else have we got here? I've had some emailed earlier today. Okay, so why should you buy a property? That was a funny question, but a good question. So, first of all, I'm a huge believer in property for wealth creation. So, at the moment, if you are renting, you're obviously paying off your loan, off the loan for a property investor that's out there. And really, if you're renting all of your life and then you get to retirement age, you haven't got any bricks and mortar to live in, or you're going to have to try and come up with somewhere else that you can live. I think when you're paying off your own property, you're contributing to your own wealth creation. So, it's like an addition to your superannuation. I'm a huge believer in property. I love property. I've got investment properties and I have my own home myself. And property's been really good to me, and it's easy to understand. You don't need to sort of, be constantly studying the share market or wondering whether you've got your funds invested in the right managed funds. And I mean, there's lots of people that are very successful in that type of thing. But property is easy to understand. It doesn't require any special qualifications. You don't need to be doing a lot of study of the market. It doesn't take a lot to jump on one of the realestate.com sites or domain and work out what is a good buy and what's not, and how much you're going to be looking at for your property. And at the moment, with interest rates as low as they are, I mean, most of our interest rates with the lenders at the moment are just under 4% or sitting around that 4% mark. It's actually sometimes cheaper to be paying off your own home than it is renting. But lots of the advantages of having your own home, our clients say, oh, I can't wait to be able to hang a picture on the wall and not have to ask the landlord for permission. We just did a loan recently for a lovely couple who were really excited because they're moving from a unit into their own home and they're going to be able to get a dog. So that was very exciting for them. So all those sorts of reasons are, why it is wonderful to have your own home instead of renting. Okay, I'm just going to check these questions again. Okay, from Belle, how do I get out of paying rent if I'm casual permanent but I work 6 days and make a decent wage? Okay, that's another great question, because there is a lot of lenders out there now that will do loans for casual employees. So how it works is, the lenders are really switched on to the fact that a lot of employers don't want to put people on permanent because it's, difficult to put them off, or if things go quiet, it's not as easy as it used to be to sort of get rid of somebody. It's really common now for home loans to be done for casual employees and permanent part-time employees. So how they work it is they prefer you to be in your job for, well, depends on the lender, at least 6 months, and then they'll average your income out over the 6-month period. So if you're earning a really good wage and you've been there at least 6 months, I think you've got a very good chance of getting a home loan. Limited lenders, you've probably got a choice of maybe about half a dozen lenders, but still some really good lenders. Interest rates under 4%, so definitely some really good options there for anyone that's casual or permanent part-time. Okay, I'm just going to check again. It's a shame I need glasses. Okay. Sorry about this. Okay, I think that's most of the questions answered. I'm just going to check through my notes and see what I've missed. Okay, I'm pretty sure we've covered off most of everything. So as I said, we offer a completely free service, and that includes the planning stage. Someone pointed out to me not too long ago that some people plan for a couple of years for their wedding, and then they can't do a home loan in the first time they sort of approach a bank or a lender or a broker, and then they give up on the dream. Well, please don't do that. Sometimes the plan is 12, 18 months, 2 years, 3 years. I had a lovely client and friend of mine recently who moved into her home in February, and her plan was a 3-year plan. So, it can sometimes take a little bit longer than you'd ideally like, but it's still really worthwhile to put that money aside every single week and start building up that deposit. And what you generally find is once you know what that target is, it will happen earlier than what you'd had planned. So I really encourage you to come and see one of us, and don't give up on the dream of your own home, and please help me spread the word, because I'm super passionate about getting Australians into our rental market. There's been so much talk in the media about overseas buyers and international buyers, and as a matter of fact, we often get emails from broker groups saying, get your brokerage firm Chinese ready. Well, I have no intention of becoming Chinese ready. I'm not racist whatsoever, but I want Australians to be buying our own properties. And yeah, I'd really appreciate it if you could help me spread the word, and let's get more of us buying our own homes and get out of that rental market. Thank you so much for the opportunity, Saffron, tonight. I'll just make sure we haven't got any more questions. Okay, we do. We have one more. How much equity do you need in your principal home to buy an investment property? We're thinking of keeping our home but renting it out for future super and buying something else to live in, from Donna. Fantastic question. Okay, so the bank will let you borrow up to 90% of the value of your existing property for the deposit. So you probably need, say, about 20% equity in your existing property to be able to go on and buy another property, but it really depends on that purchase price on the other property. So just to give you an example, on a $400,000 property, if you were going to be buying something for $400,000, you would need to be able to take a loan out for at least $40,000 on the property that you already have. So if you've got at least, say, 20% equity in your property, you're probably going to be able to do that. But if you want me to work it out for you a little bit more accurately, just flick me an inbox and I shall answer that question more fully for you. Now, I'll put some of my contact details on the link to this live broadcast. And if anyone's got any questions, please feel free to inbox me. No question is silly to me because I've been doing this for 12 years, and believe me, I've had some crazy questions and I love them all, and I really love helping people. So yeah, give me a call or make an appointment and come out to the office and see us. Thank you. Night, everyone.